What is going on, everybody? It is January 25th, 2024. Daily log episode over NQ. Live stream review over the trade that I took. If you're not in attendance today, I highly suggest that you're watching the live streams and the daily logs together because it's going to further your understanding. It's going to reinforce the understanding of the live stream and what happened that day, and if any trades were taken, what we could have done better in terms of analyzing where price was going. If you look at the views and the contrast between the live streams and these daily logs, it's a huge distinction between them two. And to me, I've always stated this, I think that this is much more important than even live streams, because to me, these are where they really helped me during ICT's mentorship, is him going through each day, recording what happened, and then giving you a bias or an opinion on what's going to happen the next day and seeing that unfold. So I just kind of want to get that off my chest. I always say that, but I think it's very important that you do watch these. And for those who do, congratulate yourself. I think I put a lot of effort and time into these videos, and at times it sucks to see there's a lower amount of views. So enough of the rant. Let's look at the weekly time frame here. So I talked about yesterday how we were above the buy side liquidity, and today was potentially either we're going to see a lower movement, a shift lower, which we ended up seeing ultimately, or we're going to run above this wick in here to overlap it and go up above yesterday's high. Coming into the session, I was highlighting a few points, which were the wick and the CE of it, and even this would be 75% technically, but that's 8.25%. When you mark out the wick in ones, quarters, halves, 75%, zeros, so you have basically 5 levels technically on a wick. But if you're just paying attention to the 25, 50, and 75%, if you're going into a day like today where we've taken out buy side liquidity, and here you can utilize that as when you go down to lower time frames, looking to see in those same areas where 50%, 75, 25, if there's any inefficiencies, PD arrays, where price is rejecting off of, if it does start to reject off of, you know, on a daily time frame that it's utilizing that wick, because wicks will act as gaps. Just picture it as if there's many fair value gaps within the wick, right? So if you go down into a 4-hour time frame, if you were watching the live stream, I was annotating the same wick right where the daily time frame was. I'm annotating the 4-hour. So if you extend this out in time, we almost tag the 50% of this wick in here. So everything was recorded on live stream. This is a rejection block. So on a higher time frame, this is your last up close candle before our series of down close candles. And if you're utilizing that daily wick and confluence with this as well, it's the reason to see the stab up into it. 1-hour time frame, bearish order block in here, resting inside of a premium. So from this dealing range high down to its low, that's inside of a premium. Equilibrium's here. What's right underneath the order block is a bearish fair value gap. So after taking out buy side liquidity, we return into a premium with a fair value gap, a bearish order block in here. In confluence with the daily time frame wick, the 4-hour wick / rejection block, we displace up into there, leaving sell side liquidity pre-open. Looking at lower time frames in here, let's go into a 15-minute chart. If you find that area, particularly what I was paying attention to today, which I annotated live on stream, was this breaker in here, because we have a low, a high, a lower low, a higher high, and a lower low. Particularly, it's the high, lower low, right? So that's your bearish breaker. Both of those last down close candles in there. And that's the side of the 1-hour order block as well. Could annotate this up close candle, bearish order block there, residing inside of the breaker, inside of a premium. If you look at, this is what we were looking at in the morning, how price left a sell side liquidity pool resting underneath price in here. So I didn't end up catching any shorts today. I actually went long. And this is where these concepts, one person could take a trade and be right, and another person could take an opposite opposing trade and also be right. And that's how these concepts work, is your model is particularly what suits you and your personality best and what you find easy in that session. So for some people taking that long, like I did, they wouldn't particularly like that. They would rather look for a short. And even today, I wasn't completely sold on the idea that we're going to drift off lower. I think calling a top in here was a little bit in real time, a little less high probability to me. I would have rather just kept with the longs and sticking with the narrative until we were completely proven to the point, like today, where probably tomorrow we're going to see lower prices, and we've seen that collapse lower on the daily time frame, the 4 hour, the 1 hour. So if we go down into a 5-minute time frame in here, take away this line. I'm just going to take away a few things in here. So if you're paying attention to the live stream, I had multiple areas of inefficiencies marked up, and even this one as well. If you extend that out to your right, this is your premium fair value gap. So that's our parent dealing range from that swing high down to the swing low. And at the open, we had a news event driver prior to the open. Displace higher, gravitate towards that inefficiency in price. And then we drop down into this discount fair value gap. And I was trying to weigh the decisions on whether or not I should be looking for longs or shorts. And in a good condition where there's not sell side liquidity like we have here, if we've had a run on stops and there isn't sell side, the narrative is bullish, higher time frame is bullish, I would have been willing to go long inside of this discount fair value gap on a 5-minute time frame, and I would have had a much better position. Then I'll show you where I had it. But in real time, I could have also made the case that we could have easily dropped right through the inefficiency in here and ran right for the sell side liquidity. So I was teaching in that moment where if you're not particularly sure on a side, just wait for evidence, wait for time to make that decision for you. And you may not get the best entry, you may not get the lowest, risk to reward, but at least you're protecting yourself from a potential loss and you're waiting for more evidence. There's going to be times where you can pick off an entry in here on a really easy bullish day, and you're able to have a really nice risk to reward, be able to squeeze a lot of the position out rather than waiting for what I did was a second stage of distribution in here to target the buy side liquidity. And it wasn't that long of a trade, but it was still something to get in there, get my profits, and move out of the way of the market. So if we drop down into a 1 hour time frame, inside of this inefficiency, we drop a little bit beneath it, and even this one in here, which is fine. What I was doing particularly was waiting for the silver bullet, because at this moment in time, this is when the window opened, and I wasn't sold on the bearish idea yet. There's a few other factors in real time. You have to go back, and if you didn't, at least watch the live stream, because there's a lot of things that I don't talk about as well in the daily log, such as dollar index, SMT, just paying attention to a lot of things in real time that I don't have time to cover in a daily log. But I was waiting particularly for the silver bullet, and I didn't want to go short in here. If we dropped off lower, had a nice displacement, formed a fair value gap, then I would have probably been willing to go short, because at that point, we would more than likely would have reached for the sell side liquidity. But in here, we displaced higher, and we returned into this SIBI. So from that low, or from that high down to this low, extended out in time, even though we haven't gone above it, even though price has not gone above it and utilize it as support, if I know that price is bullish and it's returning into a opposing SIBI or BISI, and it's still inside of it, hasn't gone above it, so it's not technically a inversion just yet, but I know, or at least I have a idea that it's going to gravitate higher. I'm utilizing the idea that it shouldn't drop beneath or close outside of these lines. So once we got up into it, I'm anticipating that price should not drop beneath the discount low of the SIBI in here, because I'm utilizing it as an inversion, even though it's not technically there yet. So that's just my own personal little studies. I don't know if ICT's talked about that, but anytime I'm extremely confident in a setup and we're inside of an opposing SIBI or BISI, but it hasn't technically created an inversion. If we're at least at the CE level, I'm expecting it not to drop beneath the discount or premium of it, vice versa, whatever I'm doing. So in here, this is where I ultimately end up going long, because we have a displacement higher. We're taking out sell side liquidity here, dropping down into that 5-minute BISI and 15-minute fair value gap in here, which is inside of a discount. So from this dealing range low, from that wick, from the news event driver up to that high, we're dropping down into a discount, gravitating away from the discount, shifting above an old high, shift in market structure there. Nothing in here for me to go long. If there was a fair value gap, particularly in this area, then I would have been willing to go long, but there wasn't anything for me to get into the market. So we displace higher again, another shift in market structure here. We drop down into the fair value gap, bullish order block here. Look at the bodies and the way they're respecting the fair value gap in the order block and the discount level of that inversion. Displace higher to attack the buy side liquidity and run up into that premium fair value gap once more. So in the real moment in time, I was holding on to basically one more contract, which I got stopped at a break even, to see if this was really going to run higher today. Because in real time, I didn't know if we were going to tear off higher or end up collapsing like we did. But this is a really good example of just risk management, pulling off partials, protecting yourself. So I took out 2 contracts as soon as we got above the buy side liquidity, got on that premium SIBI. We dropped down again into the inversion and this small inefficiency there. And once we ran above a high again, that's called running down equity. So anytime, as ICT would say, if you're in a position and you're making new highs or you're making new lows, that's a good point to take out a partial. So as soon as we ran above the buy side liquidity, I took out another partial, and then you can see the collapse lower. So I'm very proud that I was able to do that, manage the position correctly, because I could have easily just put my stops to break even, got stopped at break even, and nothing would have been pulled out of the position for that day. So you'll see that a lot. Unfortunately, I haven't had a really good runner on live stream yet where I'm able to hold out for 50, 75, 100 handles, because those days will come where I have a very good position. Lately, it's just been 30 to 40 handles that I've been able to get in and get out of the market. So hopefully one of these days I'm going to be able to showcase an example of holding on to a position for 50 to 100 handles. New York session has been a little difficult the last couple weeks here in terms of, for me, holding on to runners. If you look at this entire sequence as well, that is a market maker buy model on a 1-minute time frame. So here is your original consolidation. Here you have stage of accumulation there, second stage here, smart money reversal, low risk buy here, and then the second stage, the original unicorn, which is where I bought. And that's why it's the highest probability setup inside of a market maker seller buy model, because at that point, the market maker seller buy model is 75% complete, right? We've already done 75% of the work. So by that time, I'm fairly confident that we're going to reach up into that buy side liquidity. And here's a little bit more risky of buys, but in here, if there was really a nice fair value gap resting where that low was, I really would have been able to go long in there, but there just wasn't anything for me. So in here, I had to elect to go with the second stage distribution. We got above the buy side liquidity, original consolidation. I even talked about it on a stream where I didn't even really notice it was a market maker buy model until somebody mentioned it to me. And that's why I don't particularly preach it, because if you pay attention to the draw on liquidity, you pay attention to your model or your PD array, your multiplier, where you should be getting into the market, you're going to be entering into a market maker seller buy model without even really knowing it. So that's the reason why I don't preach it or really heavily teach upon it. It's just something good to know and spot. As far as the rest of the day, we had a really nice sell-off, which I was mentioning after I got off live stream. Basically, gun to my head, I was electing to believe that we we're going to run for the sell side liquidity. And that was due to ES and YM. They're both really drifting off lower. Dollar index was moving higher. So there was a lot of factors to lead to looking for lower prices. And here's a really good example of just holding onto a position, which if I was able to, I don't trade PM session that often, here and there. But right after lunch, you can see just a really nice drift lower. And here you could just hold out for these relative equal lows, and even low down here, we had a new day opening gap, which was residing in here as well. So go back and study that. I did the same thing yesterday for you guys. This is your homework to go back through the PM session, study it, see how you would have positioned yourself in it, go back to TradingView and kind of do some hindsight executions and see how you would have managed it now knowing the information. What I'm looking at tomorrow is I want to see if we want to drift off into the new week opening gap. And I want to see if we can dig into that and potentially dig into the sell side here and the inefficiency that rests right beneath the sell side, which is here. So I'll see what price action looks like tomorrow with New York session and coming into it. But I would like to believe we're going to see lower prices going into tomorrow. We'll just have to see what happens overnight. With that being said, thank you guys for all the new subscribers, support. Appreciate everybody liking, subscribing, everything. So until tomorrow, good luck and good trading, everybody. Be safe.